month, and we know sell in May or go away. So what is your strategy there?
You know, that's an old trader's expression. It's been around for a long, long time. And sometimes it comes right. You know, you sell in May and forget about it and come back a couple of months later. But sometimes it doesn't work. It didn't work last year, for example. If anyone had sold in May and gone away, they really would have missed big upward moves in the market. So, you know, it's one of these funny old things. I think it probably comes to the fore when there's a lot of nervousness and concern about markets around. And during those times, people say, you know what, I'd rather be out of the market and not take the risk of having of being part of a fall. And maybe, now I'm not suggesting this is going to happen, I'm just saying maybe given all the concerns, all the bad ingredients we got at this at this point in time, it may have some relevance. But you never know, markets are funny things. You know, all of a sudden you get the Greeks saying, no, things are looking all right there, and bang, it changes, and the mood and the sentiment changes. So yeah, you know, I think if you looked at it historically and actually worked out how often go in May and sell away is correct and how often it's wrong, you probably find it's more wrong than right.
We've got positive economic data out of the US. The ISM index for manufacturing indicated an increase to 60.4 in April from 59.6 in March, signaling an expansion in the manufacturing industry there.
Yeah, and you know, that's to be welcomed. And that, if you tie it in with the consumer data, which also came out, it's suggesting that US economy is starting, well, it's not starting, it's continuing to move along reasonably nicely. We're not talking about a V-shaped recovery by any stretch of the imagination, but it's moving along reasonably nicely, and because it's not going at a huge lick, it means it's probably more sustainable than it otherwise would be. So yeah, and you know, we see a similar thing occurring in our PMI.
Yeah, I was about to say. Our PMI at 55.2 from 55.6, still above that 50 level mark, but the decline is a bit worrying.
Not really. If you look at the February figure, for example, that was what, it's 60.4. And a lot of people said, well, you know, that's really not sustainable this early into a recovery. So to come back to the 55 level where we've been for the past couple of months, that's actually, coming back to what I said earlier about the US, I think in similar vein, it means it's more sustainable, and provided we don't go back into contraction, which I don't think we're going to do. If we stay in this kind of 50 to 60 range for the next couple of months, I think it means, again, we're talking about a more long-term sustainable improvement in manufacturing, because the PMI is effectively an early warning indicator for what's happening in the manufacturing sector.
Looking at employment figures out today, SA quarterly labour force survey due to be released by Stats SA. It'll be interesting to see the type of trend that it will bring out, given that we've just come out of a recession.
Yeah, and this is a key factor. Okay, it's a lagging indicator in the sense that people only tend to get employed by companies once those companies are confident that the recovery is underway. So as a result, it lags a little bit. But hopefully we're going to start seeing some encouraging signs. It's the trend that's more important than anything else, particularly when you compare this with the one that comes out from Stats SA, for example. If the trends are suggesting that employment is starting to improve again, then again, I think we can get encouragement from that, because it tells you that this recovery is well underway and can be sustained.
All right, and then we've got Australian government with the whole mining industry imposing a tax of about 40%. Which companies are likely to be affected?
Your big mining companies, and the ones that will be affected most, as far as our research suggests, would be companies like BHP Billiton, Rio Tinto and Xstrata, with Anglo-American far less affected because of their lesser exposure to the Australian market. BHP Billiton and Rio Tinto, effectively Australian companies, so they really take the big whack. And they're, of course, up in arms about this. Look, it doesn't kick in until 2012. But the estimates I've seen is by about 2014, you could probably see tax rising from the current level on average for these guys of about 34% up to about 57%, which means that earnings growth could taper off really rather significantly. So I say, howls of protest, we may well see a revision of these proposals over the next year or so before they actually kick in. In similar vein to the way we saw revisions to our own mining charter over the past few years. But what it does do, I think it sends a very interesting signal, saying that, you know, had this happened in South Africa, there really would have been howls of protest. Oh yes, you know, some African country doing this and blah, blah, blah. But in fact, here we are, you have Australia go with a pretty draconian set of principles, suggestions, I should say, and they're largely getting away with it. I've heard some commentators saying, well, it's actually quite a good idea, and you think, well, okay, fair enough. It's a tax on super profits. I always have a little bit of a problem with that, because on the other side of the coin, what happens if you go into a situation where commodities are no longer the flavour of the month and you have super losses coming through? Do you get a subsidy from government? I don't think so. So I'm always a little bit wary of having taxes on super profits.
And you've got the mining industry providing about 18% of Australia's taxes, despite accounting for about 8% of the country's GDP. Definitely the mining sector should be up in arms.
Oh, absolutely. Look, I think the Australian government sees it as being an easy target. And look, like most developed countries around the world, they don't have a huge deficit, but they have a deficit, and they've got to try and, over the next few years, make sure that they plug that gap. And this is seen as being an easy target, get big taxes from these guys and throw it into the pot. So, yeah, you're quite right. I mean, it does contribute a huge amount to the Australian economy, disproportionate in size to its GDP contribution.